You guys are watching this video right now all over the world. You're alive and blessed. Can't really complain. Welcome to Misunderstood, an MYB trading course. In today's session, we're going to talk about one trading strategy that every trader must familiarize himself with, or at least trade before in their entire life, but they didn't know what it was. We will call this order block. What is an order block? A order block is a price zone where institutional banks and large financial banks has placed their sell orders or they buy orders. Why is order block important to know? Because there are areas that represent high liquidity. Price always tend to come back to a order block before revisiting it and continue going in that direction. They help traders identify the smart money move. Now, so that we understand what is an order block and why is it important, we want to look for an order block. And how do we look for an order block? There are 4 criteria to identify a valid order block. The first criteria is the previous candlestick must close below or above the previous candlestick. After we identify step 1, we want to move on to step 2. We want to look for a gap in the price. For example, a price that caused an imbalance. After we identify that, we want to look for the price having unmitigated it. If price mitigated it, the order block will be invalid and that will be a no-go. After that, to get an extra confirmation, we want to wait for price to make to the break off structure. Once price make the MS, it's going to always retrace back to the start. So by saying that, we're going to look at it on the chart for a live example. So here we have 2 examples here. We have a bearish example and we have a bullish example on one chart. So it's pretty quite unique. So let's get right into it, right? So the first one we're going to do the bearish. We're going to do the bullish, right? So as you guys see right here, right? This fat green candlestick right here, right? The candlestick prior to that, then the candlestick prior to that. Now, the first candlestick I said, the previous candlestick must close below. So since this is a bull market, it must close below. So you guys see the candlestick right, these two red candlesticks right here. The one before the green candlestick is the order block, and the one prior to that is the previous candlestick. So once this candlestick closed right here, once this candlestick closed below this previous candlestick, it let us know that we have the first criteria. After that, we want to look for the second criteria, which we call an imbalance. An imbalance, we're looking for a gap. You see the gap right here, the candlestick closed here and the other candlestick open up here, leaving us a little gap right here. Let us know that this is stage 2 of our criteria for the order block. The second criteria is make sure price have not yet mitigated it. If this price candlestick right here would have formed this wick right here and eat it out, this would have been a no-go. But it still is a gap, so let us know price have not yet came down and mitigated. And the last factor is the key factor. If you guys want to wait for an extra confirmation, make sure the order block lead to a break-off structure. What is the break-off structure? It let us know that market have shift from a bearish to a bullish. So you guys see how price came down from a lower low, lower high, lower low, and then it went back up to form a higher high, a swing low before it went back up and break past the previous high. On the top here would be a swing high, and then when this right here is liquidity sweep. So once the liquidity sweep took place, it came back down. So you guys order block right here, and then here you guys could come and get you guys short with long position right at the order block. Put your stop loss below. Give yourself a little bit of room because liquidity might come and sweep this right here, and then price will go back in your direction. So after we identify the bullish now, price went back up to your take profit into another support level, which is an order block right there again. So 2 order block in one trade, it's rare, but it happened. It'd be life, you just never know. So on the vice versa, order block here, the candlestick prior to that, see same. Let me move this for a second. Let me move this so you guys can see. See the green candlestick right here, it closed above. Remember I told you guys earlier, the first criteria is the previous candlestick must close either below or above the previous candlestick. So in the bullish market, it closed below. In the bearish market, it closed above. It closed above right here. See right here, it closed above. Then it lead to the bullish. And the second criteria is the imbalance. It may cause a gap. The candlestick right here, it leave a gap. And the other candlestick open right here, close right here, it leave a gap. So now that we have the second criteria, price have not yet mitigated. So then that let us know we're all set. And it also lead to a breakoff structure right here. See right here, it lead from a higher high, higher low, came back from a higher high, price came down, lower low, lower high, lower low, and came back down and break it. So when price break it, break structure is going to always retrace to wherever the break place started, which was right up in this candlestick right here. So you guys want to put you guys will come right here, put your resistance here, because now this become the resistance. Yep, this become the resistance, and you want to wait the price to come back in this area right here. And as a scalper, what you guys could do right here, put your short right here, and you guys get a quick scalp just like that. Can't even complain. And just ride it right here with a liquidity sweep. Right? Just like that. Simple as that. Then we move on to the next chart. This is same scenario, but this on this chart we're gonna be a bearish situation. Same here, guys. It's simple as this. Simple as this, guys. You can't even complain. Can't even ask for nothing more. See right here, guys. Let's move this right here. First criteria again, like we said, the previous candlestick must close either below or above the previous candlestick. See the green candlestick? You might barely see it, but it closed little above it. And it came back down and pushed price down, leaving the gap. You see, make sure you have the gap. You see the gap is right there, a space between the candlestick, and it have not yet made it. If this candlestick they came and touch it, it would have been an invalid candlestick. But price have not yet, so that means it's unmitigated price. Then price lead to a what? A break off structure. The break off structure is the key, guys. Break off structure is the key, because price is going to always go back to where the break off structure took place. So what we want to do, we want to come right here, put our resistance there, and wait for price to touch it. As soon as price get it, and just like that, guys, we put our stop loss below the trend, and we will ride the wave down, just like that. Simple as that. And as a scalper, trading order block is perfect for scalpers, man. It's the key for scalpers. Because see right here too, another order block for the scalper. Now what you want to do, candlestick prior to that, it's below it, valid. We have a gap, valid. Is haven't yet mitigated it, valid. Lead to a break off structure right here, valid. It's giving you all the sign, guys. You just guys have to look and be a little bit patient. You put a little bit of positivity in the air. You gotta be positive with it, and simple like that. Wait for price to come back down. The break off structure happen. Wait for price to come back down, guys. A quick scalp for you guys. The toolbar is at, where the toolbar is at, guys. So we come right here, get our rectangle, price break off right here, our demand zone right here, price came up in there. This would be the quickest scalping trade ever right here, guys. And you would come right here, get your guys long, and just like that, you would put it below it, enter the market there, put your stop loss above it there, and you just ride this just like that. And right there would be a perfect entry trade. Now let's try going a live chart on Bitcoin and USD. I always recommend you guys practice your chart, your draft on a live chart, because Bitcoin, it's never stopped. So on the live chart now, simple as this. As you guys can see, order block right here, bam, just like that. We didn't identify that. It wasn't no hard biggie. How do we know that? Because it closed below the previous low. It haven't yet closed the gap yet. No mitigate, lead to a break off structure. Can't even complain, guys. Simple as that. Simple as order block traded. And wait the price to come back down. It's formed there. It haven't yet break it. What you guys could do now, get your guys long, put your stop loss, because since price already came back down, price came back down, break off structure, price came back down, mitigated, came back down to form a swim high. If price break past here, price would then lead to a downtrend. but price have respected this demand zone. So what we guys will do, put our stop loss below this right here, and we can just ride this here to another perfect. We can put this right here to be sure with you guys. And we want to do, come like right here, guys, put our, this will be the high, the resistance now. So when price come up here, then we want to exit the trade, and just like that, we will let this play out, and just like that, we're in the trade. We're not really in the trade, but this is how you guys will really officially make your guys trade, because price will usually come up here too to mimic this, and we will be all set. So we have two demand zone where price will norm. So you guys have to always watch when price come up in this area, this demand zone, right? With that being said, I hope this video find you guys helpful. Until next time, as always, stay blessed and mind your business.